series of the Sit Down Wellness under the topic Financial Education. Without further ado, we do have our guest, as you can all see him on our shared screen, Mr. Sandile Masuku. Welcome, Brother Sandile. A very passionate guy. He's very passionate with financial advising. I've met him in 2021, right?
Yeah.
When I was at University of Johannesburg doing my honors. And from my knowledge, I know that they cater mostly for, or predominantly for students with honors and above. Am I right, Mr. Sandile?
Yes, you are 100% correct.
Yes,
can you still hear me though?
So I feel like this session will be very fruitful, even when you're still a student. Yes, we can hear you. Oh, I'm sorry, I think I lost connection right there. You guys can hear me now better, right?
Yes, I can hear you.
Okay. Yes, so without further ado, I would like to just start this service with prayer, and then I'll just give over to Brother Sandile to present. Oh, and before the house rules. So I think I would prefer it as to give over to Brother Sandile to present. And if we have questions, we would just park the questions until the session where we give over to you guys to ask where you guys want to ask, unless Brother Sandile gives an opportunity for questions during the topics that he will unpack. Is that okay, Brother Sandile?
Yes, that's okay with me, Luyanda.
Okay, no problem. Let us pray. Modimo ntate, modimo mora, modimo moya ho ralelang. Kreste ntate, sena ka seholo sa lehodimo, re a leboha wena Jehova modimo. Ka sebaka le motsotso wena Jehova o mfileng ona. Ka sebaka ke ise Jehova le bahlanka ba hao modimo. Le matla a re fileng one as the executive of Wesley Guild Braamfontein wena ntate. Hore re bone ile monyetla wena Jehova ntate to host such an event, my Lord. Let it be fruitful to our ears and to our brains, Heavenly Father. Hobane wena ntate, re bana ba hao ntate. Hobane wena ntate, we go forward wena modimo Kriste, from being students to being young professionals, even in these economic conditions wena ntate, where we lack knowledge with finance, my Lord. But you brought forth wena modimo Mohlankano hao Brother Sandile to come, Lord, and just give us what he knows and what he's actually good at and what he's passionate at. Heavenly Father, ke rapela hore o ntshe boyena o kenye boyena ntate, and give him the authority, O Lord, and take over you, Lord Jesus Christ. Ke rapetse wena Jehova ntate, se ka thapelo e telele Jehova mo ka nkutlwang teng. In the mighty name of our Father, the Son, and the Holy Spirit. Amen.
Amen.
Brother Sandile, I think you can share your screen. Okay, I see your screen is shared.
All right. If there's any issues, please just stop me in case you guys can't hear me, because
Okay.
I am seeing that load shedding is scheduled in the next hour or so. So the network might go, but I'll try finish within the hour. And then if you guys have any questions, just please feel free to switch on your mic so that you can ask me any questions as we're going along, because we will be talking about a whole lot of different topics. So wherever you guys have any interest to ask any questions, just unmute yourself and feel free to ask me the question.
Okay,
So,
no, not a problem. Thank you, brother.
all right. So just to reintroduce myself, all right, I think my screen is fine. So just to reintroduce myself, you guys formerly know me as Sandile Masuku, as Rianda has introduced me. I am a PPS graduate financial advisor. So I am an advisor based on UJ, but I also do advise people who are outside of varsity. So with my company, right, we only accept people. We are an insurance company, but we only deal with people who are doing their honors, their masters, their PhD, and everything above. Some 3-year qualifications do qualify, 4-year qualifications, such as LLB. They're equivalent to the same levels as honors. So those people also do qualify to be members here at PPS. So I am age 26 right now. I'm not that old, I'm not that young, but the good thing about all of us is that we can relate to each other on a whole lot of different financial topics. So I did study accounting at UJ. I did graduate. You know, we all go to varsity at some point to study something. And then afterwards, you need to go into something. You need to branch out into what is available for you. But I specifically chose financial advising is because I really enjoy having conversations about financial literacy and financial education. So that's why I chose financial advising. So we're going to start off with this basic triangle that we all must have probably seen in varsity, or you must have seen in high school at some point, which is the financial hierarchy of needs, guys. When we are starting our lives, you have to follow this basis for you to be successful. So what is your financial hierarchy of needs? Just to go through it, as you can see, we always start at the bottom, which is your basic needs. The basic needs that we know that everyone can't live without is the usual, the water, the food, the clothing, the shelter, the data. Those are all the things that we usually need right now for the basis of living. So whenever you start earning your first salary, this is where we always start. So now we need to move up onto the next level. Once you've got those basic needs, we move on to your financial safety. What is your financial safety? Your financial safety is you starting to get insurance, guys. I like to always ask people the question, what is your most important asset? And a lot of people like to tell me it's their cars, it's their phone, it's their laptop, it's their house that they bought. But we're not talking about those things. The most important asset that you own today that you need to understand is yourself. You are your most biggest asset that you could own, because I need a physical Luyanda. If he's going to buy a car, I need a physical Luyanda to own that car. If he's going to buy a house, I need a physical Luyanda to buy that house. So you are your most important asset. No one's going to own those things without you being there, most firstly and most importantly. And then afterwards, financial safety also consists of you putting money away, saving money for rainy days, because there's always unforeseen circumstances that you will never ever think it would ever happen to you. So you need to have a little bit of money saved up just on the side in case for emergencies. If you have your car and a tire breaks, or the rim cracks, or the windscreen has a problem and you don't have any car insurance, make sure that you have that emergency fund there to help you in any situation. A healthy emergency fund should consist of 3 to 6 months of your living expenses. So if you are earning 10,000 Rand a month, you need to know in your emergency fund, you should at least have 30 to 60,000 saved up already in there. That is a healthy emergency fund. And then last but not least, it also consists of your savings. If you guys are saving today, that is a very good thing that you guys are saving. Some people live on a month-to-month paycheck every single month, but you have to get into the basis of saving. So that is your first financial safety. The next thing that we're moving on to after getting all your financial safeties right is starting to accumulate your wealth. What is wealth accumulation? So this has got to do with you starting to make your investments, right? This has got to start with you saving for retirement. And retirement, guys, you always need to make sure that you always save for retirement. Because some of you guys, you do have your honors degrees, your masters, or whatsoever. Your salary is no more going to be a basic 3.5 or a 7.5, but your salaries can be up to 15,000, 20,000, 30,000. Some people even earn up to 50,000. If you're a doctor, some of you earn up to 90,000 a month. So you always need, imagine if you're earning that type of money. And then at age 60, what company is going to hire you? What company is going to hire you at age 60 and tell you, yes, come here with your gray hairs, we're going to take you in? Most likely they will probably retrench you or cut you off before retirement. Some people are even lucky enough to reach retirement, but you still need to maintain that 50,000 Rand lifestyle after the age of 60. That's why you're starting to save for retirement. Right now, while you're in your 20s, while you're in your 30s, you're putting money aside and then saving it up until retirement. That by the time you reach age 60, your money starts paying back to you. And while it's busy sitting right now, it's going to be in some sort of investment. Remember, R1,000,000 today, guys, is not going to be R1,000,000 in 20 years. I like to always use with investing, guys, I like to use the Coke. I like to use Coke as an example. The can in 2000, our parents always tell us these stories that it used to be 2 Rand, it used to be 1.50 Rand or 1 Rand for the can of Coke. Today in 2022, we buy that same Coke for about 12 Rand, 10 Rand. You know what I mean? The space that it grew in a matter of 20 years was a lot. So if you put away your R1,000,000 now, by the time you reach age 60, it's no more going to be R1,000,000. It's going to be 8 million Rand or 5 million Rand. But with investing, you have to be saving for the long run. You're not putting in the money today to take it out at the end of the year. You put in 1,000 and you're expecting it to be 2,000. We need to be realistic, guys. Who earns money that quickly? So when you're investing, invest for 5 years, invest for 10 years. Just put that money away and forget about it for a long period of time. Start investing if you're ready to put the money away for 5 years to 20 years. It's up to you, but you'll start seeing great returns on your investment after long periods of time. And it also comes off to paying off your debt. The cars, the boats, the jets, the houses, the Cape Town apartments, you need to start paying that off and making sure that it's now officially in your name. Because nothing that you own, if you're still paying the bank some sort of money from it, you don't really own it. So always make sure that you're starting to pay off your debt. And the second last that I like to get into is financially free. That's where each and every single one of us would like to see ourselves. So this has got with you spending your retirement age. Some of us, we don't want to retire at age 60, but we want to retire while we're still in our 20s, while we're still in our 30s. That's where we would want to have the bulk of our money and start enjoying life. You want to go on vacations. You just want to go around anywhere. If you being financially free is on a farm, put it on a farm. If it's on a beach with the ocean over there, just put it there on the beach. It's your decision where you want to be financially free. We all have different ideas. Some people want to be international. Some people want to be in Sandton. So we all have different financially free goals, but we just don't want to worry about money when we get to the stage. And the end goal is that you always want to leave a legacy. So this has got to do with estate planning and wills. A lot of people neglect these things, especially the people who have money. You always tend to forget that all the money that you have needs to go somewhere. So we're going to get into that right now. But for you to follow this thing, you always need to remember, guys, that you want to live successfully and you also need to die successfully. As harsh as that sounds, you always need to live and die successfully because that's the end goal, to always leave a legacy behind. So Sorry about my screen not being as neat. It was the only way I could make the presentation as simple for everybody. I hope that you guys can see my screen. I just can't remove this thing. Okay.
We can see it, Sandile.
Oh,
Thank
all
you.
right. So this has got to do with estate planning. This first section that we're going to talk about has got to do with personal estates as well as wills. So you guys know that once you finish varsity, you finish with the school life, you're going to start working and you're going to start accumulating assets. So once you guys are earning a lot of money, you've got your investments, you've got 6 cars or 5 cars, you've got a house in Sandton, you've got a house in Cape Town, an apartment over there, and you never ever drafted a will, and something happens to you. That's where the family start coming in and the family start fighting over everything that you accumulated because you never said who goes to what. So everything that you are going to accumulate in your wealth, in your life, has to also go back to wills and estates that you must never ever neglect. So what rounds up your personal estate? Your personal estate is the cars that you have, the vehicles at home. That has got to do with the physical cash. How much do you have in your bank account? How much do you have in your 32-day savings, your savings? There's also investments. You can also put a couple of investments that you've done there, your easy equities, the stuff that you're trading in, all your cash that's lying around. It also consists of your property, your houses, wherever you are, as well as it also includes, okay, there's the last one, which was your investments. So that rounds up your personal estate. But you must always remember, your personal estate, once you pass away, they always round up your assets into a personal estate, which is either a positive or it's either a negative. So how you get to a positive is you owning the house, you owning the cars, having cash. Can you see you on the positive side of things? And if you know that you still have a car, you're still paying it off today, you bought it for 400,000, you still owe 200,000. Can you see now the car is more on the negative side of things? So always make sure that you remember that I said you get to a section where you need to pay off your debt. So now this is how we calculate it. We always calculate, all right, is the person in a positive state or is he in a negative state? If you are in a negative state, you owe. If you're in a positive state, you own more of the assets. So always try and make sure that you keep in the positive state, in the positive side of your estate. So the second section that we have is trust, CCs, and PTYs. Trust meaning trust funds. You know, sometimes you get trust fund babies, your closed corporations, and your companies. So with those type of things, what do those consist of? Those consist of your trust funds. So you, in case you pass away right now, everything is going to be under the children's name. But instead of going to a particular beneficiary, it goes into a trust fund. So everything is under the trust. So isn't it you guys know that some people run businesses, right? And you probably earning a 20,000 Rand salary from, imagine the guy who's running Pick n Pay. He can say he's paying himself 20,000 Rand a month, but the company is making 2 million Rand a month. Some people are more privileged and can buy the houses, buy the cars under the company. So instead of getting a 1 million Rand house under your personal estate, you can get a 5 million Rand house under your business. So some people do purchase their things under their business. So this is what we're talking about. The trust funds. This has also got to do with the cash that you have for your company, as well as the investments. And this is also dependent on whether it's a closed corporation or a PTY. You get different types of corporations. They operate a little bit differently, but the same principle that I'm explaining happens with your business. So, okay, over here, you get all your business equities. But you must also remember, guys, it gets a little bit more complicated in this section. Because for the people who are a little bit older, you must remember that it can actually even come down to whether you're married in community of property, or whether you're married out of community of property, or you are married with accrual or without accrual. So remember that, let's say I purchased my house and purchased my car and purchased everything under my business, right? And then after I purchased it under my business, all my assets. And then afterwards, I had a first wife, and my first wife, I put my first child as the beneficiary. So in case anything happens to me, my Pick and Pay shop must now go to my child, my first wife's child. And this is today. And now in 2030, I eventually find another wife. I'm living with her. I'm no longer with my first wife. I divorced her even. It can get complicated. So you guys need to always remember, you need to update these details, because in a scenario like that, where I pass away, but my house and my cars was under my company, can you see that the first child will inherit everything, and not the family that I'm currently living with, because my first child is the beneficiary. So with beneficiaries, guys, when anything gets paid out to a beneficiary, if the child is below 18, what's going to happen is that we will automatically open up a trust fund for the child. So in case whoever the guardian is of the child is 12 years old, we will never pay out 100,000 or even $1 million to the child straight, because the child is still underage. So the guardian will have to come to us and tell us that the child's expenses is 5,000 Rand a month. And then after that, only thereafter, we will then only pay the guardian 5,000 Rand a month. So even if you have 500,000 in that you said that you must give your child, we will only give the guardian 5,000 every month up until the child is 18. If there's still money left, by the time the child reaches 18, we then pay out everything to the child as a lump sum. So that's how the beneficiaries work. So always make sure, guys, when you get with your financial advisor, you need to have these conversations. You need to tell him that, no, I have a kid with this woman, or I have a kid with this man, and I still have a second wife, and they're on after. As things can get very complicated if you don't disclose these things to your financial advisor. But also your trust and your CCs also are dependent on whether you are on a positive or whether you're on a minus. So, like I said, that it can also be taken from your personal estate. You can see I've got a little bit of a Pac-Man over there going towards the personal estate. So you must remember that if you also purchase stuff through your company. So let me tell you another story. We had a guy once who was worth 280 million. And then afterwards, he was supposed to get some sort of life cover to assist him with the outstanding debt for these two sections. But he had a company with 280 million that was still owing. An amount in that 280 million was owing. And then afterwards, he's a personal estate. If you rounded up his personal estate, it was only worth 1 million or 2 million. But the company was worth 280 million. The person didn't have any life cover or had any sort of cover to cover him in case anything happens to him, that he eventually passed away. And everything was under the company that was still owing. That eventually when he passed away, even the house and even the cars and everything were eaten by the bank, because the bank is still owing in his company. Because remember, when you are running a company, right? And let's say there's 3 shareholders, you all owe 33% of whatever debt is there. So can you see now, from 280 million, if he was owning 280 million, it's close to 100,000, 90,000, 90 million per person. Can you see his estate is only worth 2 million? From that 90 million, the company is only going to eat 2 million and eat everything from his personal estate, but he's still outstanding 88 million. Now, can you see how big companies go insolvent? The company doesn't have money. The company can't run anymore because there's no more funds and the company can't operate anymore. So that's why you see big companies crash after a CEO or something happens. That's dependent on whether the person was relevantly covered. Remember, always stay on the positive side of things than the minus. So that has got to do with your personal estate and trusts. But always take into account, guys, the trust, the company side of things can always affect your personal estate. And it's also dependent on whether you're married. So I hope you guys do understand when it comes to marriage, you always get in community of property. What's yours is what we have together. By the time you divorce, it's 50-50. Or you can have out of community of property. What's yours is yours, what's mine is mine. And then with accrual is by the point you got married to each other. By the time you got married, whatever you accumulated in the marriage is what's split. But what you both came into the marriage with is still yours. So that is with accrual. You always need to know the difference. And with marriage, guys, you also need to understand that whatever debt your partner gets themselves into, even if you didn't sign that contract and you are in community of property, it's more like a shared debt. If anything happens to your partner, the debt is still yours at the end of the day because you are in community of property. But that's a whole different discussion that we can get into on another day. So, okay, you know the first two sections that I told you guys about. So the only thing that's going to be able to assist you with the poor liquidity in both of these two sections will be your life cover. Life cover is the only thing that's going to pour a lump sum of money into your family or into your estate to save the family. So now you have your financial advisor that needs to do these calculations with you to show you how much you need to be sufficiently covered. So let's say so for you to calculate life cover, you need to add up all your debts, guys. Add up your NAFSIS loan, the car loan, how much you are outstanding, add the house loan, add whatever loans, personal loans, clothing accounts, whatever you owe under your name. Calculate those details. So if it equals to 150,000, make sure that you get 150,000 Rand life cover. So in case anything happens to you, you will be on the positive side, but you'll practically break even. But the family will still be able to keep your houses, still keep your cars, still keep your company because all the debt will be paid off. So that is life cover. I like to say that it pours liquidity. It's the only thing that's going to pour a lump sum of money on top of your estate to make sure that everything's adequately covered. So you guys have seen a couple of scenarios where you would see a family and there's a breadwinner, and then eventually the breadwinner passes away. And then the family lose the houses and they lose the cars and they lose all the assets. And you think, oh, there's no more money, it's finished. Sometimes that's not the case. It's because the breadwinner didn't have sufficient life cover that they practically lost everything in either of these two sections. But if you have a relevant amount of life cover. So remember, my debt is 150,000. If you want your beneficiaries to have any more money, put it at 500,000 or put it at 1 million. So then afterwards, 150,000 is going to handle your personal estate, and then the other 850,000 will then pay out to your beneficiaries. So I like to call life cover generational wealth because the money pours out into generations. It doesn't just finish by you, but sometimes imagine a paid off house. So another scenario, let me say my grandmother had money, right? She got 100,000 and she bought a house. My grandmother eventually passes away. My parents will inherit the house and 100,000, right? And now my parents decide to buy another house and they buy another car and then they get 500,000 Rand. When my parents pass away, can you see I'm going to inherit both houses, both cars with 500,000 Rand. And now I want my child to have the best life ever. And then afterwards, I go and I get 5 million. Can you see when I pass away, the 2 houses that I had, the 2 cars that I have will then pour into my children and my children's children. Hence why you already see some people, guys, driving G63s and driving M4s and driving all these expensive cars, having the nicest phones and the biggest houses. And you guys are sometimes thinking, the parent is a CEO or the parent is a politician or something. Sometimes that's not even the case. It's because the people before them, the generations before them, pumped out life cover into their estates that left even more money than they actually needed. They kept both houses. They kept the house in Sandton. They kept the apartment in Cape Town. They kept so forth and so forth. So then afterwards, the children that are just going to be born are already born into having all those things. So that is life cover. Life cover is the only thing that can pour liquidity into both of your estates. So the last one that I would like to get into is the last section. This is for the people which are much more relevantly older. So this has got to consist of your pension fund, your provident fund, your unemployment fund, and your retirement annuities. So most of you guys who are working, you do see your pension fund. You do see your pension fund on your pay slips. You always see the pension fund and the UIF on your pay slips. What the pension fund is practically them saving money for you up until you reach age 60. That by the time you reach age 60, the money will then be paid out to you as a lump sum. Or when your company, if you're still working for the same company for many years, that money will be paid out to you as a lump sum once they let you go, or by the time they say that, no, you need to retire. Then you get that money paid out as a lump sum. We also have unemployment fund, which is the UIF that you see on your payslip. What the UIF is, guys, the UIF is practically they taking small amounts of money from your payslip, but in case you get unemployed, you can go back and claim from the people for that relevant money, because they have been taking that from your payslip every single time you've gotten paid. By the time you get into a point of not being employed, you can go back and claim a portion of that money just to assist you with whatever you need. That is the unemployment fund. Now, what we also have is the provident fund and retirement annuities. Like we were having the topic, guys, for you guys to be saving by the time you reach retirement. I don't know if you guys have seen, sometimes you might find certain people who are 60s or 50s, that's only when they start finishing their houses. That's when they start driving a nice Porsche or a nice Beamer or a nice Mercedes. You get to even say that Mercedes is sometimes for older people, because only older people can afford it. And you don't only want to start affording those things once your retirement pays up. So when you were in varsity and now you started accumulating your wealth once you finished, you need to be saving money throughout this process, that by the time you reach age 55, you can retire at your earliest. That's early retirement. Age 60 is actually your retirement age. That by the time you reach age 60, your money has been reinvested and paid out to you as a lump sum. But there's certain rules when that money gets paid out. Because I'm going to show you guys, you see people on iBlueIt. Some people have money, they receive 2 million, 5 million, within 2 years or even a year, the money's finished. So there's certain rules that we have to follow when it comes to getting paid your retirement annuity. Let's say you have 1.5 million in your retirement. You've been saving the whole of your life. By the time you reach your retirement age, you see 1.5 million in there. 1/3 of that 1.5 million will get paid out to you at retirement. So by the time you reach age 60, from that 1.5 million, 500,000, you get paid instantly to go spend, to go splurge, and do whatever you need to. The remainder of the 2/3 of your money so the other million will get paid out to you as a living annuity, which is just a monthly salary. from that other 2 million, you can say, Sandile, that money, I want to get 20,000 Rand a month. And you will get paid 20,000 Rand a month, but the issue is that you will get taxed on it. You will get taxed like you're earning a normal salary. But the first 500,000, you will not get taxed for it. That gets paid out to you 100% tax-free. If it's 500,000, you get paid 500,000 directly into your bank account. The rest of the 2 million will now be taxed. As you earning a 20,000 Rand or a 10,000 Rand salary, it will be taxed at normal tax rates that we have today. So that is the two things that will happen. The last thing that's got to do with your retirement is in case you also pass away before you reach retirement, then it will be dependent on whether you have a beneficiary for this. If there is a beneficiary, your beneficiary will then reap the rest of your retirement annuity 100% tax-free. If not, then afterwards it will depend on the facts. Who is your child? Who's your firstborn? Who's your secondborn? Like I said, it gets complicated. But then the law will get to decide compared to the facts. Who was living with you at the time and so forth. Then the law will then decide who's the people that actually receive that money. So that is the cases that you need to always be aware of when you're accumulating your wealth. So I would also just like to talk about other things that I saw that Luyanda did send me a couple of questions that you guys wanted to. Now, regarding your credit score, guys, where your credit score fits into all of these things, your credit score fits into your personal estate and your trust. Remember, you need a good credit score to purchase good assets or assets worth a lot of money. If you do not have any clothing accounts, cell phone contracts, or anything at the moment, guys, just try go to a dealership and say you want a car. They will not give you a car on monthly installments because you have no credit score. You guys have seen ClearScore. There is an app called ClearScore where you can check your credit score and how it's doing. A very good credit score is up to 600 points to 700 points. That is a very good credit score. Now, that's where you'll be able to buy the houses, buy the cars, and get all these things you want because you need a good credit score. But there's a lot of young people that like to take out clothing accounts. We like to take out cell phone contracts, data contracts, and then eventually stop paying those things. The moment you stop paying off your debt, guys, that's when you are actually killing yourself in these two sections. Now you are going to fall in more of the minus side because your debt keeps accumulating and accumulating because of the interest. So now for you to fix any one of those things, you are going to need the life cover to balance it out. So with your credit score, don't go and ruin your credit score with lousy clothing accounts, cell phone contracts, data contracts. But if you are in debt, guys, we can have a conversation and then always, the bank will never say no to you. Even if you say you want to give 100 Rand a month, they will accept that 100 Rand as long as that you are paying something. So always go and negotiate. They will never just say no to any amount for whatever type of debt it is. For a car, for a house, for a cell phone contract, they will accept anything. But please go back and negotiate. Don't leave it in the air because the interest will be the thing that's going to be damaging you in the long periods of time. So that is the credit score. The things that also influence the credit score is those things that I mentioned. Cell phone contracts. The best thing for you to get a good credit score is a credit card. You living on borrowed money. So if it's 5,000 Rand, your credit score, your credit card, you can swipe for about 2.5. But next month, make sure that you pay that 2.5 back the moment you get paid, because some people over exceed. By the time your salary is 10,000 Rand, they'll give you a budget for a credit score of up to 50,000 Rand. Now, can you see you earning 10,000 Rand a month? It's going to be difficult for you to balance now. So always make sure that you are spending below your means. Don't go crazy with a credit card, guys, because living on borrowed money is very dangerous. So that's one of the questions I could add on into this section. But just for the sake of time, guys, I would also like to explain the amounts that we have here at my company. So if you do have an honor student, let me just go to the next screen. If you are an honor student or you have anything above, if you're studying right now, you qualify for any one of these benefits up to $500,000. So for 100,000 Rand life cover at my company, you will pay 10 Rand for 100,000. But remember, it's not for your mother, for your brother, for your auntie, for your sister, but it's only for those who are studying towards their honors, having your honors, master's, PhD, and so forth. If you have anything below degree, diploma, higher certificate, you can go to Sanlam, Discovery, Momentum, all those other companies. We also have a product called an SPPI, which is just a monthly protection, a monthly income protection. But we can have meetings about that to explain it later to you guys. And then you must also, and that will be for 20 Rand for 2,000. For critical illness, in case you get critically ill, you get any heart attacks, strokes, cancer, or cardiovascular conditions. Cardiovascular conditions, anything to do with the center of your body, heart, liver, lungs, bladder, spleen. The moment you are diagnosed with anything, we pay you out a full 100,000 directly into your bank account. But the way this cover works, right? Let's say you get cancer and you get stage 1. We pay out 100,000 for you getting cancer at stage 1. And then your cancer worsens from stage 1 to stage 3. We will pay you another 100,000 for that cancer just worsening. And then you get diagnosed with a stroke. We will pay you another 100,000 Rand for the stroke. And then you get lung cancer. We'll pay you another 100,000 for getting lung cancer. So we pay you 100,000 for every medical condition you are diagnosed with, and pay you double the amount if the condition worsens. So that is the critical illness. For 100,000, you will pay 20 Rand. And if you, for disability, any disability, you lose an arm, you lose an eye, you lose a leg, a finger, all those are disabilities. The moment you get any disability, we pay you out the full 100,000 directly into your bank account for you to help yourself. And you'll pay 10 Rand for that 100,000. But for all 4 of these products, these 300,000 and this 2,000, you'll pay 60 Rand a month at my company. At PPS, and remember, 60 Rand a month, guys, that's like a Big Mac meal or 3 quarters in a month. For the gents, 3 Heinekens. For the ladies, a 6-pack of paninis or an Uber ride to go to the mall. You know what I mean? It's very affordable for all, and you don't need to even take everything. For all the maximums. So if you are no longer a student and then afterwards you are working, you are studying now, these will be the minimum prices you can have. But if you're studying, you can have anything from here to 500,000. You can say I want 400,000, 450, but I cannot give you anything more than 500,000 if you are a student. But if you are working now, these will be the minimums. So your minimum that you will be able to have is 500,000 for 50 Rand, SPPI of 5,000 for 50 Rand, disability of 500,000 for 35 Rand, and then critical illness of 500,000 for 110 Rand. So for all of these, you'll pay 250 Rand a month, guys. And come on, you get that thing on the adverts. Pay 179 for 50,000 Rand funeral cover. I'll give you everything for 250 Rand. And you are not forced to take everything. You choose which one you want to have. And always know, guys, here at PPS, 10% of your life cover is used for funeral cover. With funeral cover, the moment you pass away, the money is used to bury you, do everything after the funeral, the money's finished. Then the remainder of the life cover money will then pay out to your beneficiaries. So that is the life cover. The remainder of the 450,000 will then pay out to the family. And likewise with the 100,000. If you have 100,000, 100,000 is used for your, 10,000 is used for your funeral cover. Then the remainder of the 90,000 will then pay out to the family. So that is the things that I have for you guys today. Here's is my name and surname, and here is my email address and contact details in case you want to contact me about anything. Do you guys have any questions that you would like to ask? I am seeing a couple of questions in the chat box. All right. So we've got a first question from Maxwell. Personal estate, let me just move this to the side. Personal estate, reality is that there ate some months that are financially straining, leading to some missing the bond payments. Please shed light on how that has a negative ramification on your credit score. And two, if there are any remedies to salvage negative impact. Like I said, Maxwell, all you have to do is just go back and negotiate with the bank. There is a couple of laws with you and your personal estate. They will never ever just come and chuck you out of the house unless you are renting. But even if you are renting, they are not obligated to chuck you out of the property that you are staying at. And as long as that you are paying something, even if your bond payments is 7,000 and you can pay 3,000 Rand a month, they will still accept that 3,000 because it's always better to pay something than pay nothing, because paying nothing will make a negative impact on your credit score. And even if your credit score does go bad, you can always go back to fixing those errors on your credit score, as long as you are arranging for debt payments as well as paying off whatever new debt you take. Beneficiary, a sum of 3K was agreed in 2014 for my daughter. I then pass away in 2022 without amending the monthly payout. With inflation, essentials become expensive, and that 3K would really suffice basic needs. Can my daughter and the guardian amend the payment sum, the payout sum in my absence? So no, Maxwell, you would be the only person that can amend those details, as it's your policy. You can't go and take out a policy out for someone else unless it's your daughter or something like that, then yeah. But there's no way that someone can come and amend something, especially after you've passed away. So like I said, when it comes to your wills and that business, your PTYs, your CCs, you need to make sure that if you're going to get another wife, or you're going to have another child, you need to amend those details as soon as possible. You contact your advisor. So for instance, Luyanda would contact me the moment there's any change in his life, so that the moment anything happens, we can amend those details now. For in 20 years later, if something else happens, some people get children in other countries, and other countries have their own rules. The only things that I told you guys about was the rules of South Africa. But if you have a child in America now, it's going to become a totally different story. So you always need to make sure you're amending those details, especially with your cover, your life cover, your properties, and your beneficiaries. You always need to amend those details. So life cover, there are some expenses that are covered by insurance. If anything had to happen to me, is it still advised to involve those in my life cover calculation? So yes, like I just said, calculate the debt that you have. Whatever money you are owing, add that in that life cover amount. Whatever amount is your debt, that's the life cover that you're going to need. So in case you pass away, every debt that you have is going to be settled, because your family is still living in your house and still driving your car. Those things, and there's no life cover. Now imagine you as a person earning 50,000. Do you think your 3-year-old child or your wife who doesn't have an honors, who doesn't have any sort of qualification, is going to earn 50,000 Rand from next month? It becomes very difficult for those you leave behind. All right. Sorry, pension fund. Please highlight the drawbacks of withdrawing this fund when moving from one company to another. So that's one thing I didn't get into. Retirement, guys. If you're going to start putting money into a retirement, leave that money there up until age 60, because if you take out the money anytime earlier, you are going to face penalties, and the penalties will be about 40%. If there's $1 million in there, the tax man is gonna take 400,000. You're gonna get 600,000. With moving from company to company, there will be a withdrawal fee, but it's going to be something like 2,000 or 3,000 because you're just transferring it. So the company you are transferring from is going to want some sort of penalty because you are moving, but at least it will be a small amount. As long as you are transferring it to another company and you see benefit in the other company, then go ahead, because you know that that 3,000 that you lost in the course of 10 years, it's going to make you so much more money. That's to answer your questions, Maxwell. Does anyone have any other questions that you would like to ask? The platform is open for anybody else for questions. I don't mind, guys. You can unmute yourself. You can turn on your camera if you are brave enough. All right, that's all from my side. Okay, go ahead, Maxwell.
Okay.
I think hi, gent. Really, thank you for the session. Maxwell here. I think my question was partially answered regarding the assets. So I think let me just paint a scenario. So my situation is that okay, I have a house, right? And I have insurance to cover that house, hypothetically speaking, if anything were to happen to me. So is it still advised that I add that debt into my calculation?
Into the calculation that you're getting from, so, okay, this is the thing that happens with assets. Whenever you go purchase a car from the dealership always offers you life cover, right? Whenever you purchase that house, the bank that you purchased the house from offered you a life cover, right?
Sure.
But that's because you didn't have any life cover from any other company. But let's say you already had you got R1 million from my company. By the time you went to purchase the house, by the time they added that life cover onto your bill, now you can tell the bank, no, it's fine. Don't add that life cover because I've already got it at PPS with Sandile Masuku. You know what I mean? So if you do not have life cover by the time you purchase it, and the bank's not going to tell you, no, you don't need to take up this. But people get pressured into thinking that, no, I need to take up that life cover out at the bank. You can go take it out at somewhere else and cancel it from the bank. But the beneficiary that you're going to put here at PPS is the bank. So at the bank, maybe for R1 million house, they might say your life cover. So you went to purchase a house for 4.5. They say you also need life cover. Your house is now going to be 4.8 per month. The extra 300 Rand is the life cover, but they like to call it bond cover. As well as when you purchase a house and everything. It's also life cover, but it's just you've taken it out with them. You didn't have it previously when you went to go purchase the house. But it is possible to come and take out something at PPS and then go back and tell the bank, no, I don't want this one, because the banks relatively give it to you expensive. As well as the dealerships, they always give it to you at an expensive rate. So always make sure before you go buy those assets that you are making sure that you have that cover somewhere else, which is much more cheaper. Does that answer your question?
It does. Thank you. Thanks.
You're welcome, Maxwell. Anybody else have any questions? Thank you so much, guys, for attending my session. I hope that I told you guys a little bit of an insight about life and the steps that you are going to take, because everybody, no matter at what age, we all face these issues. Some people's might be a little bit complicated than others, but just make sure that you get yourself a financial advisor who's going to assist you in these matters. And my services are completely free of charge. You don't pay me for anything. You don't pay any once-off payment, but all my advice that I give to you is completely free of charge. Thank you so much for having me, Luyanda, as well.
Thank you so much, Brother Sandile. This was a very fruitful session. And yeah, you have your details over there, and the brothers and sisters over here can just anytime just contact you.
Please on WhatsApp, guys. WhatsApp is the best means of communication, as sometimes I know you guys are working. So feel free at any point in time to pop a message to me with your name as well, to that contact detail, or send me an email that I can respond to you guys with. Thank you, Luyanda.
Okay,
Sorry.
brother. Thank you. Thank you so much. Thank you so much. I think it's, Maxwell says it's a beautiful session, and he will definitely reach out as he's intrigued by this presentation. Thank you. Thank you so much,
Thank
Brother
you.
Maxwell.
Thank you so much.
Okay, thank you, Brother Sandile, and thank you everyone for joining us. We will have the second series to this session later on this year, but we will let you know timelessly as to when will we have the second series, where we are covering other issues and other topics relating to financial education. And I think Brother Sandile will actually still be our guest speaker for the next session. Thank you so much, guys. Thank you, Brother Sandile.
Thank you so much, Leander, for having me. I will see you in the second session, and we will communicate as we progress. You know, since you are my PPS client, Leander is one of my amazing PPS clients that I have right now. I hope that he is happy, and you can see that the service that you guys get and the inspiration and everything that you get to learn does help you guys in your real day-to-day life that you are facing. So thank you so much, guys, for having me, and I hope you guys enjoy the rest of your day.
Thank you, brother.
Cheers, guys.